All right. All right. So, good afternoon. It is Sunday, July 28th, 2024, approximately 12:49 p.m. Eastern Standard Time. All right. So, it's taken me a while to put this one together because I've been doing some research. My goal has been to find more efficient entry methods. I think I found one. I want to share it with you. It's a brand new process or strategy to me. I've done some extensive research over the last couple of days to make sure that I understand it and how we can incorporate it into our current trading strategy. It is a process that can be used as standalone. It shows a bit of promise there. It's also a strategy and process that could be utilized across assets on any time frame. Any asset, whether it be crypto, indices, stocks, forex, of course, any of that. So it's pretty comprehensive. It can be a little overwhelming at first, because it's dealing with some concepts that we haven't previously talked about or discussed. But when you really dig into it, it really can be simple. So I'm going to try my best to make this explanation video as simple as possible and comprehensive as possible, and illustrate and show how this could be utilized in our current trading strategy. Now, the name of this particular strategy, coincidentally, is actually called the Strat. So if you decide you want to do your own research, feel free to look up some videos and some readings regarding this process called the Strat. It was apparently developed by a floor trader some years ago, who I guess wrote a book and put out multiple classes and stuff. There's an entire website dedicated to this particular process. I think for the most part, it was developed for trading the stocks, the market. But I think a lot of people realize that it could be utilized across assets. So without further ado, I'm going to go ahead and get into it. I'll share my screen. So first, I'm going to share. We're going to share our 1 hour GJ, not GJ, but UJ screen and analysis. All right, so we're really going to get into some things today because I really want to make sure this is understood and comprehensive. So as always, we're going to incorporate it with our current strategy. So we have our support and resistance zones here. Of course, you see our 1 hour support, our 1 hour resistance, our 4 hour support, and then we have our liquidity, based off the liquidity indicator. Then we have our Red K EverX oscillator for momentum. Of course, we have our structural indicator that gives us our lower highs, higher lows, higher highs, and lower lows. Then we also have our change of character. So a couple of different things combined into one to make one ultimate trading strategy. So hopefully with this new addition, it makes things even better for us. All right, so as you can see, we got some numbers here. So with the Strat, I looked it up and found that Lux Algo actually has an indicator that gives us the numbering for the Strat. So I'm going to use Lux Algo's explanation here to kind of illustrate and talk about what the Strat is and kind of how it's utilized. Okay, so we're going to go into numbering. All right, so the candle numbers. So the Strat assigns a number to individual candles. This number is determined by the current candle position relative to the precedent candle. These include, right? So the previous candle, that's what the numbers are based off of. So a number one, so a candle with the number one, right? Is called an inside bar. This occurs when the previous candle range engulfs the current one. So as we can see here, this candle is numbered as a number one. Now, what this, in other terms, what this is a consolidation candle, right? And you'll see these are not necessarily the candles that we want to trade, but once I get into the actual chart, I'll show you opportunities where we can take trades utilizing this this kind of setup, right? But this is a consolidation candle is all it is, right? And basically, based off the explanation, right? So we see that we have this previous candle right here, right? And the low of the candle is down here. You can't really see it, but it's a wick. So the range, so this candle's range spans from here, the wick low, to the wick high, right? So this number one falls within the range. So this is an inside candle. Okay, that's what that is. It's an inside candle. There's no really directional bias when it comes to inside candles. Again, these are your consolidation candles and your ranging candles. And typically we don't want to trade those. All right, so for your number two, so this is called a two up. So upside directional bar, right, occurs when the current price high breaks the previous high while the current low is lower than the previous high. All right, I know that's a lot, right? So I'm gonna break it down. All right, so a two up, right? And like I said, the indicator is great about illustrating these for us, right? So a two up is going to be green. So anything that's again directional will be either red or green. So if it's red, that means it's down. If it's green, that means it's up, right? So this is like a one up, right? This one is a two up, right? And so basically, by definition, right, it broke the high of the previous candle. Great, right? And so that's what makes it a two up, but it didn't break the low of the previous candle. And we'll get into that numbering in a second, right? So this is what makes it a two up. The low of this candle is still lower than the previous candle's high. Okay. So the previous candle's high is right here, right? So the low of this candle is still lower than the previous high, but it broke the high of the previous candle. So again, a two up basically giving us direction, basically, right? So a two up is a candle that breaks the high of the previous candle, plain and simple. Okay. All right. Now we'll look at situations and scenarios where we're going to utilize the two up for our trade setups. Okay. All right. So keep that in mind. Now, the next one, of course, is a two down. Downside directional bar occurs when the current price low breaks the previous low while the current high is higher than the previous low. All right. Again, a mouthful, right? So here's a two down. Here's a two down. Real simple, right? So, of course, we broke the previous low and you can't really see it. So both of these have wicks, right? So here's the wick that comes like, it comes about right here for this previous candle. And then as you can see, the low of the candle that we're talking about has broken the previous candle's low, right? But the high of the candle is still higher than or still lower than the previous candle's high, right? So that's what makes it a two down, right? It didn't come nowhere near the high of the previous candle, right? So it's a two down. Again, delineated by the red two, right? Two down. Okay. All right, real simple. All right, the last but not least is called the number three. This is considered your outside bar. This occurs when the current candle range engulfs the previous one. All right, this is real simple, right? All that means is that, and we'll get into this on the chart so that you can see it. So basically a three, all right, a three is, and it can be a three up or three down. It's just the up or down is just determined by the candle color and or what have you, how it closes. But a three basically takes out liquidity on both ends of the previous candle. So let's say like this three right here. So it engulfed the previous candle, which means it took out the high and it took out the low. That's a three. And then you see you got another three right here, right? It took out the low and took out the high. And we're going to get into scenarios and situations where we can utilize our twos and our threes for trade setups, even our ones. It's just all about in context, right? So that is the explanation for the 1, 2, and 3 candle numbering or what have you. So now what we're going to do is we're going to get into scenarios on where we can utilize this and put this into our trading strategy. Okay. All right, so for illustration purposes. All right, so we know that we're trading basically, off of key areas, key zones, right? Supply and demand. Um, Now, utilizing the supply and demand strategy and process, we see here, so price came into our demand zone, right? Our support, right? Our 1 hour support. And you see we ended up getting a two down, right? Right. Then the next candle, the 11 o'clock candle, ended up being a one up, a one up. Basically an inside candle because it didn't break the range. It didn't break a high, didn't break a low. Inside candle, right? And you see basically, again, we know that the ones, right, delineate because they're inside candles, they delineate consolidation. And the same thing happened on the next candle, right? So we got consolidation, right? Um, and then this is Friday's market, so a lot of things happen within Friday's market. So at the end of the day, there wasn't enough liquidity for price to really move much. So that's why you got a bunch of consolidation for the most part at the end of the day. So let's take a look at probably a better illustration of how we can utilize the strat within our trading strategy, right? So 4 hour support, right? So price came down, probably grabbed some liquidity or what have you from a previous low or something. We know that we have some liquidity here, some weekly liquidity sitting here. That doesn't seem like price came and touched that day, but in any case, we created this support zone right here. So once this support zone was created, and how we want to trade this is, again, when price is entering, same thing we've been doing, right? When price is entering our key zone, our key area, we're looking for opportunities to get in on the trade setup, especially if it's in the direction of our overall the overall direction of the market that day, right? And I'm gonna show you some of what that looks like. We're gonna kind of change the way we look at that a little bit for our day trading setups. So anyway, so using this to illustrate, so we see that price created this support, and then once it created, came back in, created off this candle right here, came back in a little bit, right? So we had a two down candle, right? And then basically what you want to do, if you're looking for buys and price comes into your area of interest. Now we're doing this on the lower time frame. If we're trading the 1 hour, we're looking for our entries on the 5 minute time frame. And as a matter of fact, let's go to our 5 minute time frame. All right. So on our 5 minute time frame, so just illustrating what we were just looking at, right? So we see price came in, and actually this was a three on 5 minute. This was actually a three down because it grabbed liquidity on both sides of the previous candle, right? And so we see where we ended up. The next candle was a one up, then we got a two up, right? Then we started coming back down, right? There could have been some profit taking, whatever the case may be. We don't know, right? So we got quite a few two bars, right? Why? Because we were taking out the lows. We were taking out the lows of these candles, right? So that's what gave us the twos. Then we ended up getting a one, right? So we got a one down, right? And so then, so again, one being engulfing, then a continuation, right? So the next bar continued and gave us a two down, right? So again, for our entries though, once price comes in to our zone or area of interest, right? Again, on the 1 hour, we go to our 5 minute, our entry time frame to look for opportunities to get in on that trade, right? So all of this, we wouldn't have saw all of this just yet on the 1 hour. So you wouldn't have seen this, go up and all of that stuff, right? So we would have once price started coming back down into our zone of interest, right? We then look to, look for the entry, right? So we got a two up. And this is where I say we want to utilize setups like the two up here to give us our trade entry, right? And as we can see, even using our momentum oscillator here, right, we can see that this would have been a good entry to utilize, right? And so We get in right here and we target. We have to have a target. We utilize our 1 hour time frame for targets, and I'm gonna show you how we do that. But I just want to show you the entry first, right? So price creates the order block or the demand zone, comes out of it, right, and then comes back into the demand zone, right? Because we did get a close, we did get some close outside of the demand zone, and then it came right back into the demand zone. And so then we want to look at our opportunities to get on the buy, for the directional move, right? And again, right now, what we're doing is I'm just illustrating the different scenarios and how to, look at entering the market. This isn't necessarily part of our overall analysis and, all of that stuff looking at. We'll get into that here in a few. Just want to illustrate the entry method or a entry method because there's quite a few that can be utilized for this process, right? So again, we got a 2-up bar. So that's our entry. And I'm going to show you what, again, how we can utilize pre-orders to get into the market when we see stuff like this, right? So again, we got the 2-up and boom, price pretty much, went up quite a bit from there. So let's go back to the 1 hour and I'm going to show you. So that's the entry process. That's what we're kind of looking for our entry. So price come down, creating our twos, ones, twos, downs. Then we're waiting for that 2-up bar. Once we got that 2-up bar, we can look at our confirmations. We can see that again, momentum wise, we're good to get into that trade. So that's our buy signal right there. Boom, we're in that trade right there, right? All right. So now we're going to get into, I'm going to show you something. All right. So once we're in the move, and I'm going to show you another method to get into it as well, that we can look at to get into these moves. So what I want to do is I'm going to get to the technical. Okay. All right. So now that you saw the entry on the 5-minute, right? So here's what I wanted to show you. So look, all right. So once we got our entry, right? And here's another method, right, of entry. Here's what you're kind of looking for, right? What you're looking for. So if we come down, right, we get a 2, right? That's not necessarily our signal, right? But what I'm showing is, so once we got our entry, so the question could be, what is the target? So our entry really is, and this is what happened on the lower time frame. We got a 2-up, which engulfed the previous candle, right? And it pretty much looked the same as it did on the 5-minute, but this is the 1 hour, right? But it looked the same. It was kind of the same on the 5-minute, but you had more candles and everything. So what it is your entry, and using a strategy, right? Your entry is, and you can utilize limit orders for this, right? Because you don't know what's going to happen, right? But you can use a limit order to say, okay, if price breaks this high right here, right, then I want to be triggered in for a buy. What's my target? So once I'm in this move, what am I targeting? So what you're going to target is you're going to target previous liquidity, right? So here's what I want to show you, right? So here's where price took out this this high right here, took this liquidity right here, and basically came down and took out this liquidity. See it? Took out that liquidity, right? But nothing has taken out this liquidity just yet, right? So look, we had a candle that then took out this sell side liquidity, right? Took this liquidity out right here, right? And then started pushing up, right? Nothing is yet to come back and take out this liquidity. So if that's the case, then we're still making a trek. So once we're tapped into this move right here, if we're not going to come back and take this liquidity just yet, more than likely we're going to go and grab that liquidity because this liquidity at the top side has yet to be taken out. So that could be a good target. So your entry is here, right? The high for a buy entry, the high of the previous 2 down candle, right? This is your entry. Your take profit or your target can be the high of this 3 candle where the liquidity has yet to be taken out. This is just a quick scout, but let me show you what that looks like in pips. So from the time we're triggered in, the high, once price breaks the high of that previous candle to that liquidity right there, we're looking at a 57 pip move. I don't know about you, but for a quick scout, I'm good. For a quick scout, I'm good with those numbers right there, right? So that's pretty much how you want to, kind of look at this, right? Now we're gonna get a little bit more advanced real quick. Look, I just want to show you this. and show you how we can get a little more advanced with this. So this basic entry process, basic analysis using our current trading process, supply, demand, market structure, price action, all of that, right? But incorporating the strat into that with using the 1, 2s, and 3s, right? Using the 1, 2s, and 3s. Oh, before I get into the more advanced process, I want to show you what a 3 looks like. So you see these 3s. So in a lot of cases, if price is already going down, right? Momentum is to the downside, right? These 3s are going to basically they're going to be continuation. So we got a 3 down, right? We know, of course, we had this 2 up, right here. That could have been profit taken or whatever the case may be, but then we got a 3 down, right? Which means more than likely price is going to continue to the downside, right? So we took liquidity on both sides and then down. So what happened was this 3 candle started out, it opened right here, right? Took the liquidity from this previous high and pushed down. That's all it did, right? It pushed down, then maybe some profit taking, whatever the case may be, or some stops and stuff were triggered, that pushed it up a little bit, right? And then the next candle, we get a 2, right? So comes up a little bit. So we know that the candle opened right here, pushed up a little bit, and then pushed all the way down and created and took out the low of this candle. So again, this is what trending markets look like. It's when if we're in a downtrend, we're taking out lows. We're taking out lows, right? We're in an uptrend, we're taking out highs. We're taking out highs. That's what we're doing. When that changes, right, we have to look at the context in which those changes happen, right? Because we have a 2 down right here, right? But we have a pretty strong uptrend. We got a fair value gap right here. So this is a perfect opportunity to get into an up move. If we, again, this is just illustration purposes, to get into an up move. So we got 2 up, 2 up, then all of a sudden we got a 2 down, right? Okay, that really doesn't change anything. All I'm doing is I'm waiting for, because look, here's how you can do that, right? We say, okay, I got a 2 down. So basically what I'm waiting for is I'm waiting for price to break this high right here, right? Once price break this high, then I can be tagged back in and target this high, the high of the previous candle. Let's see what that would have looked like in pips. So we came in, we're tapped in once we break that high right there, and we're targeting the high of the previous candle. Let's just say 43 pips, 43 pip move. Again, I'm good with those. I'm good with those numbers. I'm good with those numbers, right? And it didn't get it on, it got close on the next candle, but it got it on the candle after that, right? No drawdown, absolutely no drawdown in this setup whatsoever. No drawdown, right? Again, I'm good with those odds. And even if you did it like, again, this one right here, if we did it right, no drawdown, right? We get a 2 up, we're tapping in, we're tapping into this trade. Once price breaks this high, right? I'm in this trade, 0 drawdown. I lose no money on this trade right here. And I reach my target. And it really reached even more than that, right? So anyway, all right. So now that you kind of see that, I think you kind of starting to get the picture now. Hopefully that's the case. You're starting to get the picture of how this can really, really enhance the current strategy that we're using and, just your trading as a whole with timing these entries and everything. So what we're going to do is, and I debated whether or not I wanted to go into this just yet, but I'm going to go ahead and do it and let you see what it looks like, to get a little bit more advanced with this stuff. All right. So as part of this strategy, the strat, right? There's a thing called multi-time frame confluence. I'm gonna call it multi-time frame confluence. It's like multi-time frame agreement. So basically what we have here, right here, we have our monthly chart of US JPY. We have our weekly, we have our daily, and we have our 1 hour, right? So this is our multi-time frame confluence. And this is how we can do top-down analysis. Again, this is just using the strat, not necessarily using market structure or anything like that. but just solely based off of the strat, right? So here it is, right? So on the monthly, so what you want to see overall, here's the whole purpose of this. Overall, what you want to see to add strength to your trading, your moves, right? We're just going to take one candle. We're going to take one candle, right? And what we're looking for is, so on the monthly, we see we're on a three, right? We're at a three down. We're at a three down. So that means we're pretty bearish, obviously, for the month, right? So price took out the previous month's high, and then it's been going down ever since, right? We've taken that liquidity from the previous month's low, which is why it's a three, because we took out liquidity on both sides, right? We actually took out the previous 2 months lows, right? Took out the previous 2 month lows, right? All right, so that's our three. That's our monthly. All right, so we know that overall for the month of July, we're bearish, okay? So you keep your eye on that, right? On the daily. So then we look at the weekly, right? On the weekly, the last 1, 2, 3 weeks, right? The last 3 weeks, we've been doing twos, right? So basically we've been taking out lows. Real simple, right? So again, um, pretty simple. We're bearish. We're bearish. So on the weekly, we know we're bearish. Last week, we were very bearish, right? So again, I'm starting to get a bias here for the month, for the week, right? So a bias for the week is bearish. Then the daily, right? This is where we concentrate on, right? For our scout moves, right? So on the daily, what you want to look to see is you want to see where price is. And so you had a couple of green days in here, but for the most part, as we saw on the weekly, we were pretty bearish for the entire week. Lots of twos, right? We had some two ups, but those two ups quickly turned into two downs on the very next day. So one day we have a two up, the next day we had a two down, very, very bearish two down, right? And it went for quite some time. Then we got another one where we had a two up, like barely a two up, right? And the next day we end up with a two down, and the next day even another two down, even bigger two down. And so what happened, right? You can see where I was telling you about those targets, right? So price grabbed the liquidity. So we grabbed the liquidity. It wasn't a lot of liquidity up here anyway, to really grab, right? So price did pull back a little bit, and then as you can see, we've been pushing down. It was targeting this liquidity here, right? But even more so, we continued to grab even more liquidity as we went down. So now we see where we had a nice grab of liquidity, these lows right here, right? Which is now where we're in a situation so we had a two down. Now we have a two up on the previous trading day. So Friday, we ended up with barely a two up, right? That could have easily, that could have been a one, or it could have been a two down. It really could have been a two down, but it ended up being a two up because we took out the previous day's high. So that's why it's a two up, because we took out the previous day's high. So right now, right? So on a daily, you want to see where we are on the daily, on the daily time frame. So each day, again, we know our overall bias, right? Looking monthly, weekly, daily, and then our hourly time frame. We want, again, if we're able to take trades, what we want is for all of these to be the same direction. So we want our weekly candle to look like our monthly candle. We want our daily candle to look like our weekly candle, and we want our hourly candle to look like our daily candle. So that's basically how you want to trade this. If the confluence isn't there, and really for our scalp trades, like the ones we just illustrated when we were looking at our analysis time frames and everything, our 1 hour and stuff. So basically you want to concentrate for the daily. Obviously, we know that the best setups are going to come when we're in the direction of our monthly and our weekly, right? But daily, for our daily scalps and our trades, we can really just look at and concentrate on the daily, right? So with that being said, right? So what we're looking for, right? Because we got a two update, right? So usually twos lead to other twos, right? So if we have a two update, then we're looking for another two update. So what does that look like? Good question. So what it looks like is, so we'll look to see if price breaks this high, right? Remember I talked about the setup, right? So this is the daily. So if price breaks this high, right, then we're going to look to see if it targets this high, right? So here we go. So if price broke the high of the previous day's candle, and we look to target the next high from the candle, the other candle, right there, 127 pips. That's going to be the next target. If we get, and we're going to wait. I'm not looking to really trade Sunday, Monday. I want to see how the market develops before I get into anything. But again, if we get a break, right, of this high from Friday, we get a break of this high, then the target is going to be not the previous candle, not the Thursday candle, but the Wednesday high. That's what we're going to target. We're going to target that liquidity right there. That's an easy target. Easy target. Because the liquidity on the other end of that is going to be down here somewhere, right? Which it'll be kind of like right here, right? This will be the liquidity that could be targeted, right? But again, we'll wait to see because Sunday, Monday, the opening of the week could give us a 3. And if it gives us a 3, you want to see, is that a 3 up or a 3 down, right? Based off of that can kind of help us to determine what direction we want to, look at. And then also we'll look at what the weekly candle is looking like at that time as well. But again, we have to let it establish first, Sunday, Monday trading, the opening of the trading week, right, to give us that bias for the week, right? We already know the previous week was bearish, so we want to see if we continue with that bearishness, right? So basically, is price going to at some point? And this is overall. This was just illustrating what's going on the daily. But when we look at the weekly, right, we'll look to see, right, we can get tagged into this trade if we set it for the week, right, we can look to get tagged in where we take out this weekly low, right? And let's see, where would be a point of liquidity if we did take out this low? Might have to go to the monthly for that. All right. Yeah, if we take out this low, yeah, who knows? Who knows how far this is going to go? Right? Maybe down here. That's pretty big. That's pretty huge. Let me just show. So if we take out this weekly low, right? We take out this weekly low, we're probably going to target this low right here. These lows right here. That's 500 something pips. Look, I don't know. We don't know what's going to happen, but just for illustration purposes, we see that we've already taken out this low, right? So again, we can see what we get for the week, right? But if we do take out the low from last week, then there's a good chance we're coming down to these lows right here. Very good chance we're going to come down to these lows. So let's watch and see what happens. Again, breaking it down to the lower time frames. And again, this same process and strategy can be used on any asset, right? Across the financial markets, any time frames, right? You just got to put 2 and 2 together, like literally, right? Maybe 2 and 2, 2 and 1, 3, 2, 1, all of that good stuff, right? So we're not going to get caught up in the into the combos just yet. That's going to be in a more advanced video that I do to kind of break that down a bit. But there are some combos, and you can see them. The indicator, kind of prints them out. These are called pivot shotguns. Again, we'll get into that at a later time because I really want you to concentrate and focus on, getting these entries down. Kind of utilizing this method along with our support and resistance key areas strategy that we've already been using, but we want to dial in just a little bit. Again, this was just a little more advanced look at how to utilize this strategy. Again, just trying to give you different things to look at, different scenarios and stuff. I hope this has been comprehensive. I hope I didn't move too fast. Of course, if I did, you can always rewind the video and rewatch something. If you have any questions, feel free to put them in the comments. If you like the video, please give it a thumbs up. And like I said, again, I'll just kind of based off of, some feedback and understanding and stuff, I'll do another video that kind of details it. We'll go in a little more detail or what have you. And then maybe I'll throw in, some of this pivot shotgun combinations and things that lead to reversals and stuff like that. So as always, thank you for your time. Thank you for your attention. Good luck to you in your trading journey.